All right, hey traders, welcome to the very first strategy lesson where we are actually going to build a profitable strategy in PineScript. So what we are going to be working on here is an RSI strategy. It's going to be extremely simple. We could add a bunch of extra conditions to this script to make it even more profitable across more markets. But for now, we're going to start really simple. And what I'm going to do is get the source code to one of the indicators that we worked on earlier in the course. So if I open up the indicators section of the course, we come down to RSI chart signals, click on that, and then come down to the source code. I'm just going to click here and copy, and then open up the Pine editor. I'm going to paste all of this code in here. And all I'm going to do is change the indicator function to say strategy. And now when I save my code, we have begun to convert this RSI chart signal script into a strategy. So let's change the title here to say strategy. Notice we have a warning down here in orange that says alert condition has no effect inside strategies. We've already covered that in the previous lessons. So what I'm going to do is scroll down to the bottom of the script and just delete this alert condition. Everything else here can stay the same for now. Click save, and we are ready to get started converting this source code into a strategy script. So this script is already detecting bullish and bearish engulfing candle patterns as our entry pattern. You could change this candlestick pattern if you want to. We're importing our Zen library, so I'm using my custom candlestick pattern detection code, but you can write your own pattern code if you want to, or use a different candlestick pattern such as hammers and stars if you want to. But for now, we're going to keep things extremely simple, and we're just going to work off the source code from this RSI lesson. We're not going to change anything about the script. All we're going to do is add strategy entry and exit orders to this script to convert it into a strategy. So to do that, I need to scroll down to where we calculate our stops and targets, and we need to add a couple of new persistent variables here. So I need to save my stops and targets for each trade that we enter. To do that, we're going to use two VAR variables. The first one will be T_stop or trade stop. The second will be T_target for trade target. Next up, we need to detect when we have a buy signal or a sell signal. So to do that, I'll just create a new block of code here. I'm going to comment this to say enter buy orders. We need to check if we have a buy signal and our strategy.position_size equals 0. That means we are flat and we have a valid trading opportunity. I'm also going to add on the end here, and bar state.is confirmed. So we only want to enter our buy orders when this candlestick pattern is confirmed. Our buy signal is confirmed. So our buy conditions are met. We have a bullish engulfing candle. The RSI is overbought. We've calculated our stops and targets. We are flat, so we're not already involved in a trade. And the bar state is confirmed, so the bar has closed or is in the act of closing on its final tick. You could move this bar state confirmed up onto our buy signals if you want to. And in fact, I might do that with this script. I'll just copy that down. So now we have our buy signal. Is the RSI overbought and do we have a bullish engulfing candle? Our sell signal, do we have a bearish engulfing candle and is the RSI oversold? And are these two market conditions confirmed? So now our buy signal code should execute correctly when we have a buy signal that is valid. And all we need to do now is use the strategy.entry function to enter our buy order at the close of our valid buy signal. So I'm going to give this buy order an ID of long and a direction of strategy.long. And that's it. I'm not going to touch any of the other parameters here. I'm going to leave them as the default parameter settings. But before we move on, we also need to save our long stops and targets. So to do that, T_stop is reassigned to long stop, and T_target is reassigned to long target. So now I can copy all of this code here, paste it down below, change this to enter sell orders, change this to sell signal. This can stay the same. We want to be flat before we enter any short trades. Change the ID to short and the direction to short. And our stops and targets need to be changed to short stop and short target. And that's it. So far, we have converted the RSI chart signals script into a strategy. All that's left to do is add our exit functions. So to do that, Again, I'll create another block of code here called manage exit orders, or in brackets our take profit and stop loss. We're going to use the strategy.exit function for this. I need to call this function twice, one for long trades, one for short trades. These functions will be triggered on every single bar on our chart because it is in our main script scope, whereas these entry functions will only trigger when we have a valid buy signal and sell signal. So what we need to do here is give this a when condition, so when to execute this order. But first, let's give it an order ID. So I'll call this long exit and this one short exit. Long exit will close the trade from the entry ID of long. So this exit function will exit this trade, and this exit function will exit this trade. So from underscore entry equals short. Now I need to pass in my take profit price. So limit equals T underscore target. This is our profit limit order. We can also put in our stop loss. So stop equals T underscore stop. Now this will pass in our long stop and long target as a saved VAR persistent variable. So this variable will stay persistent across our chart until one of these is hit by price action and we get a new signal which overrides these values again with the new updated stops and targets. So I can copy this code down here, paste it in there, and we're pretty much done. All we need to do now is tell the exit function when to execute. So when equals strategy.position underscore size is greater than 0. Now this exit order, this first exit function will only be executed or triggered when our take profit is hit or our stop loss is hit, and only when we have a long trade open, or in other words, our position size is greater than 0 and is a positive number. If we're involved in a short trade, this would be a negative number. So we can copy this when code down here, flip our operator here. So we're now checking if the strategy.position size is less than 0. That means we are involved in a short trade and we want to check our stops and targets for our short trade. If either gets hit, then we will exit that trade. The final thing to do here, it's optional, but I want to do this. I want to get rid of some of our plots here, and I only want to draw our stops and targets when we are involved in a trade. So to do that, I can I'll copy this line of code here, paste it over the top of that check there, change this operator to not equals. So now we're saying if our strategy.position size is not equal to 0, that means it's either positive or negative, which means we are either involved in a long trade or a short trade. And because we are using these same stops and target variables for both long and short trades, we can just pass in our T underscore stop here with the color of red. So when we're involved in a trade, we will plot our stop loss as red. When we're not involved in a trade, we'll plot nothing, or NA. I can copy this code here down there and change this to T underscore target, and we are done. It didn't take very long at all. That's the cool thing about PineScript. Quite often I will write my strategy scripts as an indicator script first, and then once I'm convinced that it is correctly analyzing price and detecting the setups and conditions I want it to detect, then I go to the trouble of adding the strategy code. So now let's save our script, make sure I didn't make any mistakes there. Everything looks good. The script is recompiling, and we are now drawing our stops and targets across the chart until one is hit. So here's a losing trade right here, another losing trade followed by a winning trade. And let's open up the strategy tester and have a quick look at the metrics. So at the moment we are using a fixed position size. And if I open up the properties tab, I have a $10,000 initial capital account, and we are trading one standard lot as a fixed position size. So 100,000 contracts or units on a Forex market is one lot. And this is trading one lot regardless of our stop loss distance. So what that means is our trade profit and loss will not be consistent. If I open up the list of trades, depending on how wide or tight the stop loss is, will dictate how big of a loss or a win we have. This is not ideal. in a normal Forex trading strategy, at least on the Forex markets, you would be trading a percentage of your account balance per trade, usually 1%. The strategy tester does not allow us to do that with the default settings here. We can, however, change our code to achieve this. Now, I will cover simulating risk management in our strategy scripts in its own lesson in great detail when we get to that. Particularly for when we start automating strategies, we really do need that information. For now, these scripts are better suited for just helping us to manually backtest. So the way I would usually use this data is I'd go through every trade on my chart, add it into a spreadsheet, calculate my stops and targets, my risk, and that way I can calculate my max drawdown. I'll do a crash course in the basics of backtesting later on in this section. But for now, because this is a short lesson, I think we have time to quickly add in the simulation of trading 1% of our account balance per trade. So let's do that. It doesn't require too much code to do this. There is a little bit of math involved, but you don't need to understand the math in order to achieve this. All I need to do is copy over a line of code that I have already written from a different script. I'll paste this in here. And this variable position size is going to be set to, and this is from PineScript version 4, so I need to add the math library here. So we're using the math.floor function, which will kind of round down the number. Any decimal places will be cut off. So for example, if our position size was 100.9, instead of rounding to 101, it would just round down to 100 and cut off that 9 decimal. So there's a couple of things here we need to change. The first is T entry, I need to change to close. So now we are dividing risk per trade by 100. And before we continue, I also need to add a risk per trade input. So I'll add that up here. Risk per trade equals, and then I'm going to indent all my spaces a little bit further. Input dot, we'll call this a float. Title equals risk per trade %. And the default value will be 1.0. We could add tooltips here in groups and group all of this together. I won't bother with that in this particular lesson because this is quite a simple script. But if you want to use this script, I would encourage you to do that, to go that extra mile. But let's scroll down here. So now we have our risk per trade value, which is 1 by default. 1 divided by 100 will give us 0.01, which is in mathematical terms 1%. So multiplying our strategy.equity, which is our current account balance, which also takes into consideration any losing trades or winning trades. So it's our running balance, our current account balance, not our initial capital. Our current account balance multiplied by our risk per trade. So by default, this would be 0.01, which would give us this little parentheses section here would give us 1% of our initial account balance. So we have a $10,000 account. I've set up my properties here to have $10,000 in my account. This code here would calculate 1% of 10,000, which is $100, and then it would divide it by our stop loss distance. And I need to swap this these two values around because we're dealing with a long trade. Our stop will be below our entry. Let me find an example here. Here's our entry. Our stop loss is below the candle. So we need to subtract the closing price, the entry price. We need to subtract the stop loss price from entry price, which is the close. So when we have a valid buy signal confirmed, we're entering on the close of that bar and the open of the next bar. So this formula here, this mathematical formula, should calculate 1% of our account balance. So now if I cut this strategy.entry function and we paste it at the bottom here, we can now override our quantity, our position size. QTY is short for quantity or position size. We can now pass in position size. And now this code here should, in theory, calculate an approximate 1% of our account balance per trade. Now I can copy this line of code, paste it down here. We need to swap our values here. So we're subtracting the closing price, our entry price on short trades from our stop loss. The reason we had to swap those around is because our stop loss on a short trade is above our entry. So we subtract our entry price from our stop loss price. That gives us our stop loss distance in pips as a positive number. And this mathematical formula here calculates our position size. If I cut our entry function out, paste it underneath here, and again, override our quantity parameter, Now when I save my code, hopefully this compiles without any problems. There we go. We open up the strategy tester. We should have a more consistent balance here. So if I open up my properties tab, my initial capital has changed to 100,000. Let's change this back to $10,000. I think that's a more reasonable number, particularly for testing strategies. And let's change our base currency to US dollars. There we go. Click OK. Now you can see that our account balance is calculating roughly 1% per trade. And our position size is changing dynamically. You can see our contracts here is very different on each trade. That's because our stop loss distance is very different on each trade, but our risk amount is roughly the same. Now they are a little bit off here. It's not a perfect science, this code here, but it will give us a more accurate reading in terms of using a percentage of our account per trade as our risk, our position size. I'll show you a better way in future lessons. You might have seen in earlier lessons when I'm discussing strategy scripts that I have a backtester display up here that is a little bit more accurate than the strategy tester in terms of how it calculates our 1% risk per trade. For now, let me change this back to default. And now we're trading in Swiss francs. That's what the F symbol is. And we are accurately, roughly calculating 1% per trade. On our first trade, it was a losing trade. We lost 100 Swiss francs, which is 1% of $10,000. And on the next trade, we won 98 francs. So we lose $100 here. And then on the next trade, we win 1% of our 9.9K account, which works out to be nearly 99 francs. Now if I open up the overview tab, we have a little bit more accurate numbers here. So we have a 23% return over 258 trades with an 8% max drawdown. Not a great strategy, but it is profitable. It does have an edge over the markets. If we were to go and add more filters, for example, I personally use this strategy to trade the Forex markets, but I add a lot more nuance to the strategy and I lean on some of my experience as a trader. For example, one way you can improve the performance of this strategy is only trading it at market structure. So here's a good example here. If I zoom in my chart a bit and we put in a horizontal line, let me thicken this up a bit. So here we have a area of support and resistance that has been tested multiple times. We have resistance, we have support, price rallies off this zone and then comes back down into this zone and we get our signal right in the structure zone. The RSI goes oversold, we get a bullish engulfing candle. Nice, easy winning trade here. One other approach to trading this strategy, other than modifying your risk reward profile, obviously that is an option. You could also trade multiple positions. That's not something I'll show you how to do in this lesson because it's quite complicated to do in PineScript. But one way I personally trade this strategy is when I get a valid signal, especially a high quality one like this, which occurs around an important key zone of structure. I will often, depending on the market and time frame and my backtesting results and my optimized strategy rules, I would enter long here with a 1-to-1 risk reward. And I would normally open 2 trades here, 2 positions, one with a 1-to-1 target. When my 1-to-1 target gets hit, I move my stop loss to break even on my second position, and I try to capture a large rally on my second position. In this particular case, that would have been stopped out for break even. That's a frequent occurrence. You can't win every trade, but sometimes you will capture a really nice rally out of the markets using this type of trading approach. But anyway, you get the idea. This isn't a trading course. This is a PineScript course. In the lessons to come, I'll touch on a few other trading concepts that I use in my own trading. But for now, that will do it for this lesson. The source code will be below if you want to play around with different markets and timeframes. This isn't profitable on many markets or timeframes, but it is a profitable strategy. Especially if you play around with these settings, you could change the look back period, the RSI length, your RSI overbought and oversold. You can obviously change these. You can see how that affects your return and your win rate. Obviously, we have our risk reward profile. The higher you set this, the lower your win rate needs to be in order to be profitable. But generally speaking, the more reward you shoot for, the more that will negatively affect your win rate. So that's a balancing act that you will have to undertake yourself. I can't tell you what the best win rate or best settings are for any of these strategies. You can also tweak your risk per trade. So let's set this back to the default and risk 2% per trade. Now we have a much better return, but a more significant drawdown. It's not terrible. 17% is acceptable for me in my own trading. I can withstand around a 20 or 30% drawdown so long as my return beats a buy and hold strategy on ETFs or index funds or any of those benchmarks that buy and hold investors use. As long as I'm beating that buy and hold investment strategy with my trading strategy and my drawdown is less than 25%-ish, I'm usually comfortable trading that. The catch is that if you were to trade this strategy with other strategies in conjunction, your max drawdown may be much higher, especially if you're trading a strategy that is correlated with this one. So if you were to trade this strategy on multiple markets, that will obviously affect your risk return and profit factor metrics. Anyway, with all that said, I will leave the source code below for you to play around with. I hope you found this lesson interesting. I hope you're excited because there are plenty more lessons to come, breaking down various techniques for trading using PineScript strategies. We'll also go into more information about how to do more sophisticated backtesting, how to export your strategy data into a spreadsheet so that you can analyze your list of trades. I'll show you a quick example of what that looks like. So here is an example of how I've merged multiple strategies into a single spreadsheet. We have a couple of different strategies here under the setup column. This backtest is from 2018 until I believe last month, December of 2021. If I scroll over here, you can see different metrics here, such as which days performed better than others. You can see that Thursday is in red. That's because my win rate here is very close to my danger zone. So basically, if I eliminated all 392 trades that I took on a Thursday, that would theoretically increase the profitability of this portfolio of strategies and markets. All of this information and data was exported from the TradingView strategy tester, and I was able to get more data out of my backtesting results so that I can get a more accurate reading on my total gain and my max drawdown. Now, 36% is a bit too nasty for me, so I could simply try halving my position size to see if I get better metrics here. There we go. Now we have a 20% drawdown with a 200% return. Not bad for a handful of markets and two different strategies on a single time frame. But anyway, that will do it for today's lesson. I will speak with you in the next one. Take care. Good luck with your trading and coding, and I look forward to chatting with you in the next lesson.